So I think it's time now to move to the next session. But before doing this, I've been told that a 2 minutes promo video is going to be played. So please bear with us for 2 minutes and we'll be back. Thank you. Okay, we're back again, and now we're going to have another fascinating session. We have the honor and to have with us Mr. Praveen Jagwani, the CEO of UTI International Singapore. Guess what? Praveen is going to speak about India as a fine example of an emerging market. And his session is going to be chaired by Mr. Agamemnon Kotrozos, who is the chairman and CEO of Eurobank Group Asset Management. Memos has a very rich experience, more than 30 years in Greece, in France, in Netherlands, and elsewhere. So Memos, thank you very much for being with us to chair this very insightful session. So the next 20 minutes belong to you and Praveen. Thank you very much for joining. Are you with us?
So, thank you very much for your kind introduction. Thank you all for the participation. India is always a very fascinating country, and it's a nice country not only for holidays, but eventually for investments. So we have with us the honor to host Mr. Praveen Jagwani. She's a very prominent figure with experience of over 30 years in banking and finance. Currently is residing in Singapore and is a CEO of UTI International Fund, one of the most well-known fund manager in India, and with a very deep expertise in India investment in India securities. So I give the floor to Praveen to make the presentation. We have around 15 minutes, and then there are left 5 minutes for questions. Thank you very much.
Thank you, Memos, and thank you, George. Well, good afternoon, everyone. I hope my presentation is visible.
Yes.
Great. I think the biggest question in everyone's mind right now is whether the person in the picture is me. Well, I wish it were the case. If I were that flexible, then I'd probably be working with Cirque du Soleil and not UTI funds. But the reason I picked this picture is because ChatGPT told me that most people in the world associate India with two things: the Taj Mahal. As Memos said, he likes to go on holidays to India, Taj Mahal, and the second thing, yoga. So this picture really nailed it, got both of those things. And pictures are important because they shape our perception, and perception becomes our reality, and it helps in influencing our decisions like what to eat for lunch, whom to marry, when to invest in India. All of these decisions are a function of our perceptions. So let me take you on a journey of perceptions, which have possibly been curated by the impact of popular media. And if you have only understood India from the lens of popular media, then you probably think that we in India are a country of snake charmers. All of us are IT nerds and we can fix your computers. And occasionally, we engage in wild, mystical rituals. And the worst, our cattle does not obey traffic laws. Now, all of these images have an element of truth, and really it's a matter of perspective, how you view India. If you dig a little deeper, you will find that there is another India taking shape as we speak. And I think you got a little bit of a glimpse of that from the video that was played just before our session began. India today is a leading explorer of space. In fact, India is one of only 4 countries that has landed on the moon. There's the first 3 are Russia, America, and China. India is also one of only 4 countries that has successfully executed a space docking between a satellite and a docking station. India has launched countless satellites for over 40 countries, including the UK, France, Germany, Italy. All of these countries have used the Indian space program to launch their satellites. But the one country for which India has launched the maximum number of satellites is a country by the name of United States of America. Now, why did America choose India? Well, the Indian space program is extremely cost efficient and reliable. In another dimension, India is a top-notch digital economy. Half of the world's real-time payment transactions happen in India. India's population is about 1.5 billion people. 1.25 billion people have access to internet. 750 million people use a smartphone. And for every transaction that happens in the rest of the world, a matching transaction happens in India. That is the power of a 5G connected, tech-enabled economy. In pharmaceuticals, India is the pharmacy to the world, the largest manufacturer of generics in the world. And this is not just post the pandemic, where this fact became known. India was seen as the manufacturer of vaccines, but across the drug industry, if, let's say, any of you in the last 1 month has had a paracetamol or ibuprofen or Ozempic, very likely the drug was made in India. India is also the world's fastest growing aviation market. You can imagine 1.5 billion people, they need to get from one place to another place. And India single-handedly placed an order of 500 planes with the Airbus Industries, and another airline also placed with Boeing. So together between Air India and Indigo, we've placed an order in the last few years of 1,000 new planes. As we speak, 70 new airports are under construction in India. And that just speaks to the momentum of economic activity in India, where domestic trade is becoming a big driver. Speaking of aviation, I'm pleased to report that India or Indian Airlines have the highest percentage of female pilots across all of the world airlines. So if you see right at the top on the graphic, SpiceJet, Indigo, Air India, Vistara, all Indian airlines have close to 14% of their pilots as women. Stepping into politics, this is from Morning Consult. Approval ratings of the leaders. Now, there are only 3 countries in the world where the current leader has an approval rating of more than 50%. Milei in Argentina, Claudia in Mexico, and Prime Minister Modi in India. He has, in the free world, the highest rating of all leaders. Of course, there are 2 countries which have a rating of 100%, which is China and Russia. But we shan't go into that direction. So all of these perspectives give you a sense of a new India, a different India, one that you possibly may not have seen before. But the obvious question from all of these new perspectives is, where is the money? Now, this is a chart which shows historical GDP growth rates of a few countries. So 3 data points in the middle. Column 1 is the historical GDP growth rate over 20 years. The next one is projected GDP growth rate for the next 5 years. And finally, the equity returns over the last 22 years. What really stands out in this table is that the fastest growing economy over the last 20 years has been China, 8.42% per annum economic expansion. And yet, if you look at the equity returns in US dollar terms for the Chinese equity index, it's only been about 500%. At the other extreme of the economic spectrum is Japan, less than 1% GDP growth over the last 20 years. And the Japanese equity market returned in the same time period about 410%, not too different from China. And that's the conundrum. The fastest growing economy of 20 years, China, and the slowest growing economy, Japan, gave roughly the same return in dollar terms from their equity markets. On the flip side, if you see France and Germany as proxies for Europe, they gave between 380 to about 580, so same ballpark. US gave about 920. Indonesia gave a return of 1,500% in dollar terms. And the highest return of any market came from India. So India's GDP grew roughly 6.6% over the last 20 years, and it is expected to grow around 6% for the foreseeable future, and its equity returns have been the best. So what gives? The big difference really is consumption by the domestic middle class. That is the single biggest differentiator of why certain countries, despite having a great headline economy, will not deliver equity returns. Chinese economy, as all of you know, is very top-down, investment-driven, while the Indian economy and the Indonesian economy, and to a large extent, American economy, is driven bottom-up by consumption. Consumption, as a lot of research has shown, is the single most predictable driver of equity returns in the long term. And if you look at this graphic, you can see, as estimated, over the next 25 years, consumption of the European Union is going to diminish meaningfully. That's the orange segment. United States in purple is also going to shrink meaningfully. China is going to plateau out, because of the one-child policy, Chinese population has been in decline, and China is also facing the same aging issues as the Western economies. The one country that continues to grow and expand middle-class consumption to become the single biggest consumption bloc of the world in the next 25 years is India. And consumption is really the central driver. Like I said, it's common people, middle-class families consuming tea, coffee, soap, shampoo, bicycle, shirts, the basics. And that's what drives Indian equity markets. If you look at the growth rates of Indian consumption categories versus global growth rates, you can see a significant difference. In baby care, India is almost 3.5 times that of the global growth rates. Snack foods, beverages, pharma, pet care, even watches. Across all categories of consumption, it has been proven time and again that middle class moves the needle. To that extent, India today is quite similar to the West after the Second World War, in the golden era of consumption of Europe. After the Second World War, as Europe was rebuilding itself, America was rebuilding itself, and the middle class created the concept of the American dream. These kind of growth rates were last seen then. And India is experiencing its equivalent, the Indian dream, and that's exactly why the middle class consumption is creating these kind of growth rates and those kind of equity returns. In fact, even in a category like whiskey, India is now the biggest consumer in the world. Although I was surprised that the number 2 is France. I always thought the French drank more wine, but it seems whiskey is also a big favorite with the French. But today, India is the biggest consumer of whiskey. Now, I'm not saying that it is because of the whiskey, but India is also the largest manufacturer of babies in the world. According to statistics, we are producing 49 babies every minute. And while you see cute little babies, what I see is 49 future consumers. Consumers of tea, coffee, soap, shampoo, iPhones, and piano lessons. And that's really the secret sauce of India's consumption story. When you have a large middle class, you will get an aggregate large consumption because the middle class has the greatest propensity for discretionary spending. And when you have large consumption in India, it is for Indian-made tea, Indian-made coffee, Indian-made bicycles and shirts. And these companies are listed in India. Therefore, to get the truest benefit of Indian consumption story, one must invest in Indian companies which are listed in India. So this is a straightforward equation. Having a large growing middle class with rising per capita income, you get large consumption. And large consumption of domestic products leads to large equity returns. And that brings me to power of compounding, long-term buy and hold, as Warren Buffett has said time and again. So I thought it'll be interesting for the viewers to look at what's happened to Berkshire Hathaway as a compounding business. In red, I have the performance of Berkshire Hathaway over the last 20 years. And in blue, I have the performance of an Indian finance company over the last 20 years. Berkshire Hathaway, which is seen as a pinnacle of investment knowledge, produced a return in US dollar terms about 948%. Let's round it off 1,000%. So Warren Buffett delivered a return of 1,000% over the last 20 years. Bajaj Finance is a company that has been in our portfolio for the last 10, 15 years. It has delivered a return of 131,000% over the same period. In a different category, I've compared 3M, which is a big American company, 3M America in red versus 3M India. The 3M India is a company which is incorporated in India. It manufactures its products in India, and it sells to people in India and is listed on Indian Stock Exchange. The products are roughly the same: Scotch Brite, Scotch Guard, Scotch Tape, all the 3M products that you would have been Post-it, you'll be familiar with. 3M America, over the last 25 years, has given a return of 330%, while its counterpart in India, 3M India, has given a return of roughly 11,900%. Nestle is a company which is familiar to most people in the world, with Kit Kat chocolates, my favorite. Nestle Switzerland, over the last 20 years, has given a return of 50%, while Nestle India has given a return of almost 800% over the same period. So the question really is, even though these are global companies, the real return is coming from Indian consumption, and the benefit of that is being derived by companies listed in India. And it's not without reason that India, in the past 1 month, has overtaken China as the biggest investable stock, as the biggest country in the MSCI All Country Index, making India the biggest emerging market weightage.
Praveen, we have some only minutes left in order to
Right. And with that, my final slide, the key messages: India is the fastest growing economy in the world, not just emerging markets. It has delivered the highest returns in dollar terms over the last 20 years. India's economy is determined by consumption of the domestic middle class, and India's middle class is going to be the biggest in the world in the years to come. The party has just started. Come to India.
Praveen, thank you very much for a very useful and eloquent presentation. We'd like to see the question. So the first one is, how well is the Indian stock market functioning? First question for Praveen.
No, India has about 6,000 listed companies, of which about 1,200 are actively traded, which means there's a trade every month in at least one of them. And it has a fairly wide participation across sectors. So there is no single dominant sector. For example, the US market is very tech dominated, even Taiwan. In Taiwan, for example, one company, TSMC, is 40% of the index. In India, the biggest company is about 9% of the index. So there's fairly well diversification across IT, pharma, banking, financial services, manufacturing, petrochemicals. So you get access to all the sectors of the country because growth is across the board.
Thank you, Praveen. Do we have any other question before finalizing? I have also a question for you. What do you consider that are the most competitive advantage of India over China? Because there's always a debate. Always China was more as a global factory, whereas India is a global service provider. And we see the growth rates are much more high in India, the long term. And the challenge is whether and when India may surpass on the absolute figures China economy, and what they consider will be the advantage to attract more investments, direct investment actually, to India.
So, Memos, that's a great question. I think the positioning of both the countries is quite different. When you think of China, you recognize that it is a closed, opaque, and aggressive country with a completely different governance model of socialism. While India, on the other hand, is the world's largest democracy. It is in international trade and forums, it's seen as a reasonable English-speaking country with always openness to dialogue. And India has an independent central bank, independent judiciary, and a democracy that works. People have right to information. And I think these are the elements of a progressive economy which China doesn't replicate. If you had to file a lawsuit against a Chinese bank it would have to be in Chinese. You'll be signing documents you can't read, and you don't have the confidence that the system will work in your favor. In India, the language of business and the language of government is English. Indian constitution is written in English language, and in India's Supreme Court has consistently given decisions which protect the minority rights of the minority shareholders. So there is quite a strong difference which attracts foreign investors to India.
Indeed, these are very valid points, and indeed, India is the biggest democracy in the world. Thank you very much. We don't have any other questions, so I think we have analyzed our very productive, interesting session. Thank you again, Praveen, for your time and insightful points. I'll pass you to George now.
Thank you, Memo. Thank you very much. And thank you, Praveen. Very stimulating and very illuminating, I should say.